Good morning, learners. Last week, I gave you a list or a worksheet about personal income and expenses. I said you must read through it and do the activity. I've also provided you with the corrections. So now we're going to look at personal income and expenses so we can understand it even further. We have different type of personal income: salaries or wages, interest on bank accounts, rent from properties, profit from businesses. Salaries and wages. Salaries and wages, it's a compensation that you get from your employer. It's a payment that you get from your employer after providing them with a service. So employees are the people who work for a business. So someone who works for a particular business is called an employee, and an employer is the business that pays salaries or wages to the employees, which means to their workers. So now, what is the difference between salary and wage? A salary is paid at the end of each and every month, and they receive the same amount of money each and every month until the next or the following year. If they get an increase, then their salary will change. While a wage, it's paid weekly or daily, and the amount can change depending on the hours a person work, or again depending on the units that you are producing. So if you are tasked to produce 10 units of earphones, for example, and you produce less, so they will pay you based on the amount you have produced. Interest on bank account. So interest on bank account is an income. How? When you save money in a certain type of a bank account, you earn income called interest. The interest you earn is a percentage of amount you invest. So if you invest 100 rand and they give you 8% on it, or they give you 10% on that 100 rand, that means you're going to receive 110 rand, right? And that 10 rand is your income. So this percentage is called interest rate. And again, learners, the interest rate that banks offer depends on the following: the type of a savings account. So you remember in the last unit we spoke about this type of savings account. We have a fixed deposit where you can fix the money for a particular period. We have 32 days notice where you can phone your bank and say, I want to come take money in the next 32 days, and also a call account. So the amount of money that you put into a savings account also determine your interest rate, because if I put 100 rand and you put 200 rand, we're not going to get the same interest rate. If they're saying, we're not going to get the same income, because they might charge us 10% interest rate, right, for the money that we are putting. So if I put 100 rand and you put 200 rand, that means you're going to get how much? 20 rand income. I'm only going to get 10 rand income because I've put what? 100 rand. And again, it depends on the length of the time you plan to leave your money in the account. So if per annum, per year is 10%, so if I leave my 100 rand for 3 years, that means I'll have how much? 130. Yourself, if you decide to leave your 200 for only a year, so that means you'll only get how much? 120. So I'll get 130 because I left mine for 3 years. You get 220 because yours was only left for a year. And remember, the difference is that I've put 100 rand, you have put 200 rand. My 100 rand gave me an income of how much? 30 rand after 3 years. Your 200 gave you an income of how much? Of 20 rand after a year. That means depend on what? An amount you put and the time you put your money into the account. Rent from property is also another form of income. Property is the term for buildings, homes, office, or land. So in accounting term, we refer to those things, building, homes, offices, or land as property. So people buy property for different reasons. Some they buy property to live in, some they buy property to work in offices, and some to let or to rent it out to other people. So people who rent property are called tenants. So tenants pay rent to the owner for the property that they're living in. So that's how the owner will make an income from his or her tenants. So to earn an income from letting out property, the rent has to be more than the cost of owning the property. Meaning if you're still paying the bond for your product, the amount that you get from your tenant must be more than what you are paying back to the bank. Then we have a profit from a business. People who work for themselves are called entrepreneurs. Entrepreneurs do not work for other people, but start their own business to make money for their business idea. So you come with an idea of producing phones, of making furniture or designing furniture, designing phones, any idea, or providing a service, being a plumber, being an electrician. So therefore you'll be called an entrepreneur if you have such an establishment and you earn an income from your business. So in this way, entrepreneur can earn what you call a personal income. Now we're going to look at the personal expenses. Personal expenses are everything that people have to pay for in order to live. Everything that you buy, pay for. Personal expenses can also be called living expenses. We need to, because we consume electricity, DSTV, Netflix, we pay school fees, we buy groceries. All those things are living expenses we need to pay for. So those are personal expenses. Different people have different living expenses. So as I've gave an example of Netflix or DSTV, one is paying, or the other person is paying Netflix, the other person is paying DSTV. Or maybe you might feel you need to pay both, but someone feels like they only need one thing. Some are using cars, they're paying for cars. Some there's no need for them to buy cars, they use public transport. Some they buy different groceries depending on the type of food you want you eat, or depend on your diet. So hence I'm saying there's different living expenses. Then again, it is important that people manage their money so that their personal expenses are not more than their personal income, right? So you cannot live your life in a deficit. Your expenses cannot be more than your income. Must be the other way around. Your income need to be more than your expenses so that you have surplus, meaning you have money that is left after you have paid all your expenses. Then again, it may be useful again to draw up a personal budget to make sure that you are not spending more than what you earn. So before you go pay all your expenses, draw up a personal budget that this is my income and this is what I have to pay for, and see where you can cut, where if you have unnecessary expenses. Here is list of or example of personal expenses: rent or accommodation cost, cell phone, telephone cost, food, school fees, water and electricity, petrol or transport cost, clothing, medical expenses, and many more expenses that you can think of. Remember, I said different people have different expenses. This activity, you're going to do it in your workbook. I've also posted the activity on Google Classroom. You copy down the table. You're going to look for the prices of those items listed there. So you can check them on internet, or you can just simply ask your parents. Some like bread, you always buy bread, so you already know how much a bread costs. 2 liter of cool drink, most of you know how much does it cost. So, or you can estimate those prices. Please do the activity.